Hey guys, hope you're doing well today. It is a gorgeous day in Charlotte today. It's 55 degrees. It's a little bit chilly. I'm hanging out here today at Frank Lisk Park in Concord, North Carolina, just northeast of Charlotte if you're not familiar with the Charlotte area. And guys, I've got some good news today to share with you. I've got some bad news as well to share with you. So there's a lot of stuff that came out in the news the last couple of days. I wanted to make sure I got in your hands. And look at this beautiful lake behind me. This park is awesome. There is so much to do here. If you ever get out this way, I encourage you to check it out. You can fish this lake. We've got disc golf, putt-putt golf course, just a bunch of stuff to do out here. But guys, I've got some good news to share with you. Stick around to the end of this video. I've got some data points where I'm comparing some data from 2022 to 2021 that's going to really give some insight on some of the trends that I'm expecting through 2023, and I think it's going to be some really good news for buyers. And if you guys are new to the channel, we have not met yet. My name is Brian Taylor. I'm the owner of Dreamline Realty right here in Charlotte. For my viewers that are returning to the channel, thank you so much for coming back and checking out this video. So guys, we've got a lot of stuff going on here in the news. We got builder sentiment data came out. We've got mortgage data to talk about. Of course, we're not going to get through one of my videos without talking about interest rates, but I want to jump into this video right now, and then at the end we're going to go back to the office and I'm going to share that data with you. So yesterday, builder sentiment data came out and it was low again for the 10th month in a row. Let's take a look at this article from CNBC and see what they've got to say. Okay, it says home builder sentiment drops to half of what it was 6 months ago. The article says home builder sentiment in the single-family home market has fallen to half of what it was just 6 months ago as mortgage rates climb, according to a new report. The National Association of Home Builders, which is designed to gauge market conditions, fell 8 points to 38 in October from the previous month. That's the lowest level since 2012, with the exception of a brief drop at the start of the coronavirus pandemic. A rating below 50 is considered negative. It says high mortgage rates have significantly weakened demand, particularly for first-time and first-generation prospective homebuyers, says NAHB Chairman Jerry Conter. He's a home builder and developer from Savannah, Georgia. He says the situation is unhealthy and unstable. And guys, by looking at this chart right here that I'm going to show you, you can see 10 months straight decline in builder sentiment, guys. That means that builders are continually worried about where this market is going as mortgage rates continue to climb. So let's take a look at this chart. If you see back in the blue box in December of 2021, builder sentiment was actually at 84. That is a really high number. That was one of the highest numbers that has ever been recorded. And as we sit here in October, that is down to 38. So guys, when we're looking at that number, that may seem like really bad news for builders, and actually it kind of is. Again, they are worried about where we are headed here with the market. But that is actually good news for buyers in a lot of ways. So as I mentioned in my last video, which I'm going to post at the end of this one, these builders right now are getting extremely aggressive in their incentives. A lot of them are offering really low interest rates on adjustable rate mortgages for 7 years fixed. And they're doing 2-1 buy downs to help you capture a lower interest rate for the first 2 years. So with that said, guys, if you're in the market for new construction, there's a lot of opportunities out there right now. And in that video that I'm going to post to you at the end, I'm showing 5 different builders in Charlotte, giving you all of the incentives that they're offering. But almost every single builder right now in this market is offering some kind of really nice incentive to drive traffic into their model homes. And since mortgage rates are playing a significant role in that builder sentiment number, let's check out what's going on with interest rates today. From our good friends at Mortgage News Daily, a 30-year fixed mortgage sits at 7.22% right now. And guys, before I left the house to get out here to shoot this video for you, the bond market was actually worse than that today. Rates actually could get adjusted later this afternoon to maybe a little higher. As we continue to watch this inflation data that comes out, I hope I'm wrong, guys, but we could be pushing close to an 8% interest rate by the year end. I hope that I'm wrong. I really do not like to deliver this kind of news to all of you buyers out there. But again, if you're looking for new construction, even existing houses right now, guys, sellers are willing to pay $10,000, $12,000 in closing costs to help you buy the rate down as well. So existing houses right now could also be a good play for you if buying a home right now works for your situation. And since we're talking about mortgage rates, what is that looking like for mortgage applications right now? Well, an article came out today from CNBC, and this is what this reads. It says, mortgage demand drops to a 25-year low as interest rates climb. Mortgage demand, which has suffered 4 straight months of declines, fell last week to the lowest level since 1997 as interest rates continue to rise. Homebuyer demand for mortgages dropped 4% for the week and was 38% lower than the same week 1 year ago, according to the Mortgage Bankers Association. Applications to refinance a home loan fell 7% compared with the previous week in seasonally adjusted terms. Demand was 86% lower than the same week 1 year ago. As potential homebuyers struggle to afford a house, given higher interest rates and still high home prices, more are now turning to adjustable rate loans which offer lower rates. The ARM share last week rose to 12.8% of all applications, which was the highest share since March 2008. Hey guys, if you're getting any value out of this video and you find this information helpful, do me a huge favor and go ahead and click on that like button. It really helps me grow my channel and it lets YouTube know that I'm putting out good content for you. And if you want to subscribe to the channel, hit that subscribe button now, tap on that bell for notifications so you don't miss out on any videos that I put out every single week. Hey guys, I know we're in some tricky times right now, and if you have a situation that you want to talk to me about, or you need my help or my team's help in figuring out what's a good move for you, go ahead and get on my calendar, schedule 15-30 minutes with me. We'll meet online right here on Zoom, and we'll talk about your situation, put a face to a name, put a great game plan together for when the time is right for you. In the video description below is a link to my calendar. Just go ahead and click on that and get some time put on the calendar with me, and I'll meet you online. But now guys, I want to get back to the office and share some information with you about some data that's really showing some very interesting trends as we head into 2023. So let's head back that way. Hey guys, welcome back to the office. Hey, thanks for hanging out with me earlier today. I want to give you some data that I was talking to you guys about while I was on tour with you guys. And I have been asked a lot of questions recently about like kind of what are the trends year over year with closed sales. Are buyers still willing to pay over asking price? They're paying under asking price. What do those numbers look like? And because so many people are talking about it, I figured I would just go ahead and pull some data and compare the last 30 days from today versus the same exact time frame last year, and take a look and see what the numbers are and see what the trends look like. And some of this stuff is gonna surprise you actually. So let's dive in, and then I'm going to talk to you about what I think is going to happen as we progress forward through the rest of Q4 and then definitely into 2023. So let's take a look what we got going on right here. All right, guys. So what I've pulled is data points here for home sales in Charlotte, priced between $350,000 to $800,000. I looked at September 19th, 2021 through October 19th, 2021. And what I found in that price bracket right here, we have 795 houses that sold last year. 448 of those properties sold above list price, making up 56% of all sales. 105 properties sold at list price, making up 13%. And then 241 properties sold under list price, making up 30%. So let's pull in the 2022 data right now and take a look at how it compares to last year. So when we pull these up side by side, here's the data that I just showed you. This is the data from 9/19/2022 through today. All right. So in 2022, we had 601 closed sales. Now check this out. Compared to last year at 795, guys, that is a major decrease in closed properties. Higher interest rates, right? Softening buyer demand, causing less home sales. Out of that 601, 144 sold above list price compared to last year at 448. But look at the decrease in percentage. Last year was 56% sold above list price. This year, only 24% have sold above list price. When we look at houses that sold exactly at list price, that is pretty relative to last year. Actually, we have 93 this year versus 105 last year. The percentages are very, very close. And 364 homes sold under list price in 2022 compared to 241 last year. But look at these percentages. Last year, it was 30%, only 30% sold under list price. This year, it is double. It is 61% of properties have sold under list price. So guys, this should really be no surprise, right? With mortgage rates rising, buyers are having a hard time affording these houses. So what we're seeing right now is sellers having to reduce their list prices, which is why we're seeing this percentage of buyers paying under list price getting high. And as we go through Q4 and definitely into 2023, we're going to see this percentage get even higher. So sellers right now, you know, they are struggling with getting showing activity. We are seeing a lot of price decreases, and we're gonna see more of that stuff going forward, guys. So prices are gonna continue to fall. How much? I don't know. We're all watching this thing very closely as we move forward. So guys, I hope that was helpful for you. If you follow my channel for any amount of time, you know that I love data and I love to get in there and dissect this stuff. So anyway, guys, I appreciate you watching the channel. I did talk about a video earlier in the video here where I was explaining about home buyer incentives. I'm gonna put that video on the screen right now. And if you have not subscribed to the channel, I encourage you to do that. Just click on the subscribe button now, tap on the bell for notifications. Don't miss out on any of the videos that I put out every week. All right, guys, I hope you have a great day. And as always, thanks for watching. Talk to you soon.